Well, good morning, everybody, and welcome to the Options Trading for Income Weekly Update with Locke in Your Success. Before we get going, we need to remind you that the presentation is for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, please be aware that the risk in trading options is substantial, so please be aware of all your risks prior to placing any trades. And also note that we are using hypothetical computer simulated performance in trades in the presentation, and they are believed to be as accurately represented as possible. However, live results may vary. If you're watching this on YouTube or some other venue, come on over to our website, check out our programs. We have our super simple spread trades. We have the M3, the Bearish Butterfly, the Rock, the M21. We will soon have the APM Square program, and we also, of course, have one-on-one coaching available for those who would like some extra support. Become part of our inner circle by joining our mailing list, get your free report, 7 secrets to becoming a successful trader, and sign up for this free weekly webinar. And stay tuned for our programs currently under development. We have Advanced Position Management Squared coming next Monday. Therefore, we will not have a trade update webinar next Monday. I will put something out for you guys, whether it be in text or a short video, either over the weekend or very early in the week next week, so you have an idea what's going on with the positions. But we will not be doing our usual 9 a.m. Monday morning thing because I'll be teaching that presentation. The online version of that should be available June 15th. We have a Trading Triangle book coming out in the fall, which should be shortly followed by our online Trading Triangle program, which is going to deal with the business aspect and the psychological aspect of trading. It's going to be really cool. And then we're going to start getting into some directional spread trade stuff, which is really neat also. And, you know, if there's anything that you guys would like to see as far as trading goes in programs, you know, let me know, and I'll do my best to get to work on those for you. So here's my contact information, and we can move forward. Yes, APM Squared we are planning on recording that. We've got all kinds of recording stuff, and we will be having that as an online program, assuming everything goes well, and I do expect that to happen, so that should be good. All right, let's take a look at the market. Right now, or last week I should say, we were sitting here at around 1220. I was expecting the market to push a little bit lower and then bounce. Well, we had a bit of a bounce and then we pushed lower. So a little bit out of order there, but I was expecting a move to 1210 before we get any sort of a significant up move in the markets. And that has happened now. So if we look at where we went right back up to our resistance level here from this breakdown of this little box on the Russell. The SPX came right back up to its resistance level. And the Dow, not at all-time highs, but this is certainly a formidable resistance level here in the Dow. So, and of course the NDX is lagging with the Russell. It's still well away from its all-time highs. So essentially where we go from here from a technical standpoint is hard to tell. You know, we've made our bounce to our resistance area in the SPX, which is pretty much what's leading the market right now. And we'll have to see where that goes. The SPX breaks out, that's going to be an indication that everything goes higher. If I personally, like I said, I don't have any technical technical evidence that I can substantiate this with, but personally I think we're going to be pushing more into a sideways range in the SPX, the Dow, and the NASDAQ. So I don't think the move's going to be too much higher, but we shall see. The market's proven us wrong before. It may do that again. But that's what I think personally. But as far as from a technical level, which way we go from here is going to depend on what the SPX does. That's kind of a crapshoot at this point. So let's take a look at what we have going on for positions here. Drag up my matrix. And as of last week, this is the position we were sitting in with the M3 trade. We were essentially at our break-even level, and we're only 11 days to expiration. We don't like big moves to close to expiration, and that's pretty much what we got. But I'll just show you how we manage that. So today, as of Monday, our negative delta is over the limits within the trade for being, especially for being kind of at the edge of the tent here. So we came in and took 3 of these 1210s up to 1230. We brought us down to about minus 75, which is right around where we like to be at the edge of the tent. Immediately followed by a fairly aggressive down move here. I think it was Tuesday, right? So let's take a look at Tuesday. Right, 20 points down in the market by around 3 o'clock. Definitely over our positive 50 delta limit here. And usually when I start getting chopped back and forth like this, it's usually time to exit. I probably would have taken a small gain, small loss, break even on a trade like this. In other words, we've been adjusting this up, we've been adjusting it down. We've been adjusting it up, we've been adjusting it down. That's just telling us that the market is a little bit too choppy for being this close to expiration and being in the trade. Usually you're better off just to go to the next month. It's a whole lot easier to deal with, and there's just as much money to be made. So, but anyway, we just decided to stay in this. What I ended up doing is I ended up selling 3 1210, 1230, 1240 broken wing butterflies. And you'll see what that did to the position here. So if I go back, actually let me go back and show you the position where it was. This is where we were. That's what the position looked like. Taking on a little bit more downside risk than we would like. I rolled back some of these shorts that were up here at 1230, rolled back some of the longs to take care of our reversal risk, and put us in a position that looked kind of like that. So if we superimpose them, all we did is we ripped out a little bit of downside risk at the expense of adding some upside risk here. But our game is not bad at all here. So this is that was the move there. And then we sat here until Friday. Of course, we bounced right back up where we were. Right, and now I'm taking on way too much negative delta. So what we did here is we essentially sold 10 of these condors. We did 10, 1240, 1260, I'm sorry, 1140, 1160, 1190, 1210 condors, essentially rolling this lower wing 20 points higher. And then what we did here is we sold a 1220, 1230 vertical, and we bought back those butterflies that we sold the day before. So fairly complex adjustment, but I'll show you where it put us. So now we're essentially rolled up our lower shorts. Our long strike is where it was before, and we have 6 shorts at 1220, 4 at 1230. Looks at a position that looks kind of like this. So that's where we were as of Friday close. Still have a good chance of doing something here if the market doesn't really take off to the upside. If it really does, it's probably going to be a break-even trade, but we have a chance of doing okay here. So it's still looking good. Okay, so I have a couple questions. If I hedge some of my rut positions with trades with the Russell futures or the IWM, is there a way to plot risk graph for the Russell? Yeah. If you do IWM, what I suggest doing, like if you were doing a one lot M3, and so one butterfly on an M3 with one IWM call, I would suggest that you would just multiply everything by 10. So if your position is one butterfly, you put in 10 butterflies. If your position is one $110 IWM call, put in one Russell 1100 call, and the positions will track pretty much exactly the same with if you divide everything by 10. So you're just going to be 10 times your size on the option view graph, and you can do it that way. If you do TF futures, TF future is 100 delta, right? So you just put 100 delta up in here. And let's see, right? Just put 100 up in there, and that's going to give you that 100 delta. And your profit and loss should, that's just going to show you your delta, and your profit and loss should track along with the trade. So let me take that out of there. So that's how you can analyze that. If we do, let's see, what else do we have for questions here? What's the main difference between your live M3 and this sample in this adjustment or situation? My live M3 trades are actually up. Well, actually, they're closed already for May, and they were up about 7.5%. Timing differences, and I'm using advanced position management techniques, things like that, to get the position up money. This particular trade here is just straight guidelines. There's no market environment. We just, we entered 56 days, even though it wasn't necessarily the best time to enter, and we're just kind of going along. So this month it happens to be break even, but the live trades are doing significantly better right now. Some months it's the other way around, but this month the live trades are doing very well. Okay, so can I show the T-log for this M3? Yes, I can. Let me just, we'll just open this up. This here, like I said, this started 56 days to expiration, and it started way up here at the 1240s. And even though that's one of the differences between this and the live trade, it was pretty sure. I was pretty sure the market was coming down. I wouldn't necessarily have started a M3 completely flat delta with verticals in it at the very, very top of the market, and maybe taken a slight bias, not a huge bias, not a bias to the point where if the market did take off to the upside it would be a problem, but a slight bias to the downside, and that's all it takes to give you a situation where you'll still do okay if the market continues up, and you'll do a whole lot better if the market comes down. So let's see. Oh yeah, I need a 1 here. Thank you. We miss those sometimes, and we'll see if that made a difference in profit and loss. It may have, it may not have. Yeah, so it puts us at plus 494 profit here. So that is the position as of Friday. It's still a decent looking position, and we'll see where that goes from here. Now let's shoot over to the rock trade. And this trade here has also had its share of challenges this month. And again, most of us are doing a little better live here than we are with the straight guidelines, because we're using a little bit of common sense that you can't possibly know ahead of time when you doing the exact same thing the exact same way every month. But this trade here, let's go to the rock trade, was down about $600 prior to entry, at the end of near the end of the day on Monday. Let's see what I did here on Monday. T-log. I didn't think I did anything on Monday, but apparently I did. Let's see, the 4th is okay. So yeah, so what I did here is I sold 3 of these butterflies. Why the heck would I do that? Well, I did, oh, you know what? I bet the market was a little, I bet the Greeks were a little bit different at 5:30. I'll have to go back and redo this. Oh, I see what I had. Okay, I had a, all right, I know why I did it now. I had a positive Vega issue, right? We don't let these go negative theta, positive Vega. So from a Greek standpoint, I'm fine. But because we're back into this M3R thing, I have these 5 calls here, it's throwing my theta negative and my vega positive. It's giving me a T+0 line. It's going to drop out. So to correct for that, I sold off 3 of these butterflies and added some verticals down here. So you notice we have shorts at 1200. We have 5 butterflies. We move ahead. I can correct that by selling off 3 of these butterflies, moving these 1200s to 1220. Delta's relatively the same, but now my theta's up, my vega's down, right? And that puts us in a position that looks like this, but at least I have a fairly stable T+0 line now. Ended up not the best thing to do with the move on Tuesday. So basically what we did on Tuesday, if we push to before adjustment on Tuesday, right, we're 108 delta. Our maximum positive in the rock trade, even in M3 position, is going to be 100, so I'd want to fix that. And again, this is an example where we're close to expiration and the market's just choppy enough to be knocking us back and forth, in which case I have 2 choices. I can widen my delta limits a little bit if I know it's doing that to me, or I could just exit the trade, saying that, hey, it's knocking us back and forth too much. But anyway, if we're going straight to guidelines, then we would want to fix that. I can fix that just by pulling these butterflies off at the top, right? And that essentially puts me into more or less a straight M3 trade that's down money. And that's going to put us into a position that looks like that. And what happened here was nothing until Friday. So let's go Friday before adjustment time. Right, and here I have a problem with my delta being really high, my gamma being not great, and I have an awful lot of downside risk. One of the things you need to do is you need to back this out, right? One of the things Option View does is it makes the scale really small, so its position looks different than it is. So this is what we're really looking at if you have a 10-point spread here. You know, I'm fine if the market reverses, but it's not good if the market goes up. I can fix this by rolling some shorts forward, or I can fix this by rolling some longs back. I chose to roll the longs back, and that means taking these 1240s to 1230, which is going to knock my theta number down quite a bit. It put me vega to near neutral here, and my delta at about -39, but it gives us a position that looks like this, which is a relatively safe position if the market comes back. In other words, I still have a reasonable amount of downside room. If it takes off to the upside, it's not really necessarily a big problem here. It's probably not going to be a winning trade. Realistically, I'm expecting to take maybe a $2,500 loss on this trade unless the market cooperates, and just kind of move on. So this trade has been awesome all year. It was awesome most of last year. First loss in a really long time, and it's a very minor loss, so very happy with that. We'll see how that goes. But that is how the rock trade was. Like I said, it's just a little bit too choppy for the environment. Let's go to our May V Condor. So this position finally got a minor adjustment. Oh no, it didn't get an adjustment. I'm sorry, I just closed it Friday. So if we look at this trade here, let me just make sure on a T-log here. Oh, we'll go to the V Condor. Right, so we haven't done anything since the 30th of April. And what we did is we ended up we bought back some of these shorts because the market was coming down. We're hitting our maximum delta limits. So here, you know, I could, if I wanted to, I could certainly buy back my straddle, or I could hold the straddle and wait and see if the market's going to creep down, or maybe creep up and maybe take a small loss if I wanted to hold this out. I mean, that's certainly an option that I have. To me, the market's, it looks like it's going to be in this creeping sideways mode. I'm in the V of the position. If I take out the straddle, I'm not going to make a whole lot more. I just assume just close the darn thing and move on. So I just took this and closed this out on Friday. And I think we ended up with a small profit of like $1,300. This was a very easy trade, a little less than what we like to get, but let's take a look here. About $1,200, right? A little less than what we like to get, but realistically, there's really no reason to stay in it at this point. So just take the risk off the table and move on. And that is it for the May trades. If you remember, the Bearish Butterfly did fairly well. We did hit a, I don't remember what the results were on that. We did hit, yeah, the V Condor, the delta limit's plus 50 minus 100 in general. We have some other guidelines within that, but in general, that's the case, yeah. See, our May Bearish Butterfly, if I remember right, did, yeah, about $5,900 or 10%. So it's going to be an okay month. It's just going to be one of those kind of flat months that we're going to have. So let's take a look at June, see how June's doing. We have open for June a June Bearish Butterfly, which happens to be doing very well because the market's down. That's up 10%. If the market remains sideways, this should be a really good trade for the month. There have been no adjustments here. This trade's just been sitting here. And as far as our June, let's see, no adjustments for that. June M3 trade, again, no, let me go to June M3. This is down slightly, but no adjustments for this. We just put the trade on. I think we've been sitting here. I don't think there were any adjustments. Oh, yes, there were. We had a, that's why we're down a little bit. We entered at 1240. We had a rollback with that down move. So, so it kicked us back a little bit. Slightly drawn down, nothing to be concerned about. And then, of course, we have the V Condor, which did get a one adjustment on Tuesday. We bought back, I'll just show you that in a T-log. We bought back two of these puts because we hit our maximum delta level of plus 50. Put us in a position that looks like this as of Friday. So we're sitting here, again, if the market sits, you know, we'll see how it goes. But realistically, we're probably going to be sitting in this position for a while with this particular trade. So we'll see how that is. So I have, and that's all the trades we have on. We're going to be looking at doing a rock trade, looks like next week, when, not next week, yeah, next week when we're 30 days to expiration, so when we get back from the 8 p.m. seminar. So the June M3, how far outside the tent to the right? Okay, let me read this again. Far outside of the tent to the right, adding verticals past a roll point. However, Greeks are fine. Can rolling wait? Oh, okay, so I'm assuming that that's a trade that you have on. You're outside your tent. Your Greeks are good. Yeah, so you know, you can stay in that position until your Greeks present a problem. Over time, you will get problems with the Greeks, and then you can roll up there. I wouldn't necessarily be overly anxious to roll things up. If the S&P fails, then we could get a decent down move. So, and we're still plenty far from expiration. I mean, we're 42 days. So, yeah, I wouldn't worry about rolling that thing. And did I open directly a new July V Condor, or do I wait to 56 days as usual to open one? Okay, for the V Condor, I am going to open a V Condor when it's not 50. I don't use 56 days, but I do typically use when the previous month expires. So when May expires on Thursday, Friday's the day we'll be opening that up. That's typically the day I'll do it. So that is that's going to be the deal with the V Condor going forward. So that is all our positions. Like I said, we are doing the seminar next Monday, so we won't have a live thing going on. It is results week, so I'll I'll look at posting those, but I am going to be very busy towards the end of this week, so I may end up posting them after the seminar, and we'll get those out to you to let you know how things go. So everybody, enjoy the week trading. It looks like things are going to get better here, and I appreciate everybody joining me. We'll talk to you well, like I said, I'll send an update out next week, and we'll talk to you the week following, which is a holiday. I will send out some information on what we're going to do about that. So have a great week, everybody. Oh, how can we get into the seminar? Actually, you cannot. It's actually sold out at this point. And but we are going to do we are planning on recording it and having the online program available. I'm sure it's going to take me at least a month to get that together. There's going to be a lot of editing and stuff like that to go from there. All right. Thanks, everybody.